Hi, I'm Daniel Korschun, Associate Professor of Marketing at LeBow College of Business. I'm speaking today with Yaou Zhou, who's a fourth year accounting doctoral student. Why don't you tell us, Yao, a little bit about what brought you to LeBow?
Actually, my working experience basically drives me here. You might know that I was an auditor before, and I worked with Ernst & Young at Chicago for almost 4 years. And as a practitioner, when I was an auditor, I always know what to do and how to do it. But I never really get why we are doing this. So I really want to dig deeper into what we are doing. That's why I am here. I want to do research, I want to dig deeper, and I want to know why behind what I am doing.
Why don't you tell us a little bit about your research now at LeBow College of Business?
So my research is basically about auditor switch. So some of the companies would choose to switch their auditor earlier in the year, and some other companies would choose to switch their auditor later in your fiscal year. So what's the difference between these two types of companies? And do the stock market investors care about this timing? Is it meaningful to them? Is it useful to them? And does it impact their investor
Do you find that
reactions?
there's a difference in what's the proportion of companies that change earlier in the fiscal year versus
Most of
later?
them would do it earlier in the year, and maybe the 30% or even less than that would choose to
It would be
switch
somewhat
auditor later
unusual.
in the year.
So it would be
Yeah,
somewhat
it's like abnormal.
okay.
So we are really curious what's the determinants of this timing and what's the consequence of it.
So what do you find is the major determinant?
The size of it drives it basically. The bigger ones who are well organized, who basically know more about what they are doing, they would switch their auditor earlier in the year. But the smaller companies or whoever has accounting problems would choose to switch their auditor later.
And how does this translate into investor reactions?
So the investors do perceive this difference. So for the companies who switch later in the year, the investors would react more negatively, which is reflected in the stock market price.
Would they react more negatively than a company that switches auditors earlier in the year?
First, I think it's because they can perceive the drivers of this timing. They can perceive, okay, maybe this company is has some accounting problems. That's why they choose to switch later. So the investors can perceive the motivation of this timing. And second, if a company is switching the auditor later, maybe the new auditor has less time to prepare for the next year's audit. So the investors would think, okay, so the next year's audit would be impacted because they don't have sufficient time to do it. So that's why.
Yao Zhou, thank you for telling us about your research that you're conducting here at the LeBow College of Business.